Here's a problem I also have with Bitcoin. There's 21 million other cryptocurrencies. People like Tom Lee have gone over to Ethereum. Like, okay, well, there's another million you can rotate at some point. Rotate it. There's unlimited supply of, and only in 2009 there was only one. Now there's 21 million or 20 million. So they're commodities and they're expensive, and people are buying them at the highs. The lesson of commodities is they go down because they went up, and they go up because it went down. So I think we're just going to head towards that going down phase, and it's going to be pretty enduring. And things like Dogecoin are going to have to drop a couple zeros, and Bitcoin might drop a zero.
At its December 6th peak, Bitcoin finally touched the six-figure mark, $100,000. For many, it was validation. For Mike McGlone, senior commodity strategist at Bloomberg Intelligence, it was the sell signal of the decade. Sell when they're yelling, he says. The euphoric rush at that milestone wasn't the beginning of a new chapter but the top of the cycle. Since then, the market has proven his point. Gold climbed 30%. Stocks were flat. Bitcoin managed just 8%. McGlone warns that a collapse back toward $10,000, while painful, wouldn't be abnormal for Bitcoin. In fact, it would fit perfectly with its history of violent boom and bust cycles. Holders would feel the sting, but the pattern is textbook. Peaks bring exuberance, despair brings opportunity. The strategist also highlights a deeper change. Bitcoin is no longer moving on its own story, it now trades like a pure risk-on asset. Its 4-year correlation with the S&P 500 has hit record highs, a complete reversal from 2020 when it moved in the opposite direction. In contrast, gold sits in a quieter, more defined space alongside just 3 other key metals, which makes it less vulnerable to the tides of speculation. McGlone argues that the scarcity edge Bitcoin once had is being diluted. At $10,000, the fear was suffocating, perfect conditions to buy. At $100,000, the euphoria was blinding, ideal conditions to sell. Today, with thousands of coins flooding the market, Bitcoin's uniqueness is harder to defend. Scarcity is still its pitch, but it's no longer its monopoly. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
As you saw there, that's probably the third update of going to 100K. No, not, and once it got there, I thought that's the threshold. I think Bitcoin now, it added a zero. I think it loses zero now. Go back to 10,000. That's not a big deal in terms of Bitcoin's history, but for people who own it, it is. And the bottom line is right now, to me, that threshold was profound. And the first time we traded 100K was on December 6th. To me, that was a classic sign of you're supposed to be selling when they're yelling. And that triggered gold. So since that day, as of now, from December 6th to now, the end of August 29th, gold's up about 30%, and Bitcoin's up maybe 8%. Stock market's up about the same amount, S&P 500 total return. And the Bloomberg Galaxy crypto index is unchanged. To me, it's now, what are we going to do for the rest of the year? We have 1 month left, and we tilt over to the fourth quarter. And I think this is just a sign of volatility is going to pick up. Bitcoin has proved it's a risk-on asset. The 48-month correlation of Bitcoin, the S&P 500 right now is about 0.6. It's the highest ever. I use 48 months because it's 4 years. And in 2020, before the biggest money pump in history, the correlation was negative 0.05. So Bitcoin's proven it's a risk-on asset. It's going up because the stock market's going up. It has 20 million companions in cryptocurrencies. And then there's gold, which has only 3, there's only 4 precious metals, so 3 companions. So I think gold's going to continue to outperform most risk assets, particularly, and I should say but I will say when the U.S. stock market starts to give back some of its gains. And here's the key thing I'll end with is just this month in August, the VIX volatility index reached the low for the year, about 4.2. As we speak, it's back up to about almost 16. And so the month of August will go down history as the low for the year in Bitcoin, maybe. And the low for the year in the VIX, the high for Bitcoin is the exact opposite of April. April is when the VIX reached the high at 52 at the closing basis. And the Bitcoin reached the low on a closing basis, 4 p.m., around 73. So I think the market's just proving that we're at that stage now. Summer doldrums are going to tilt over to volatility. And just a question how we make out from here. And I fully expect gold's going to continue outperforming. It's a classic thing you learn sometimes having dealt with customers and done myself and seen the D's in business, and that's what I call the deaths and divorces, unfortunately. You're supposed to be buying when you're crying. And when it was around 10,000, everybody was crying. And a lot of people who are Bitcoiners. And then you're supposed to be selling when they're yelling. And this is one of the most profound, prolific examples of selling when they're yelling I've ever seen. So back then, in the first Trump administration, that's when I really enjoyed writing how this space is the most enduring bull market in this space is the proliferation of stable coins. I call them crypto dollars. Back then, Tether was $2 billion. Now the whole crypto dollar space is approaching 300 billion. Is going to the dollar. All those crypto dollars are investing in treasuries. And back then, it's when the Trump administration hated it. I'm like, okay, well, I love it. And now that they tilted over and they love it, it's time and everybody's jumping on board. Just a classic example. You're supposed to be backing off and staying away. And what's changed, David, is back then I really liked that narrative that Bitcoin had definable diminishing supply and increasing demand and adoption. Get it? Price must go up over time. Now on coinmarketcap.com, they say Bitcoin is supposed to be limited at 21 million coins. CoinMarketCap.com is approaching 21 million cryptocurrencies. In 2009, there was one. There's unlimited supply, and you see all this switching out from Bitcoin, maybe the Ether with people like Tommy Lee and stuff to Ethereum. And I said, well, good luck. That just proves to me this is a commodity space. It's highly speculative. It's wonderful to trade, but buying and holding, I'd say good luck. I fully expect things like Dogecoin, which tracks nothing, is a joke. As we speak, it's at $31.6 billion. We can lop a couple zeros off of that, and it's still too expensive. That's going to come, but the bottom line is this whole space has been on the back of the rapidly advancing, most very expensive U.S. stock market and risk assets in history on a 100-year basis.
Mike McGlone doesn't mince words. Over the next 5 years, Bitcoin is more likely to lose a zero than add one. The logic is straightforward. For Bitcoin to keep climbing, the U.S. stock market would need to keep inflating against GDP to record extremes. With Bitcoin now trading at its highest ever correlation with equities, it no longer acts like digital gold. Instead, it looks like a leveraged bet on risk assets. McGlone draws comparisons to history's great bubbles: the internet boom of 1999, Japan's stock mania in 1989, even the U.S. market in 1929. All ended the same way, with devastating drawdowns. Bitcoin has always lived inside that rhythm, cycling through 50 to 70% declines. There's no reason, he argues, to think this time is different. When Bitcoin eventually sheds a zero, over-leveraged traders and speculators will get forced out, creating the kind of capitulation that often marks the bottom. That's when the best buying opportunities emerge. The conclusion is sobering. Bitcoin's fate now leans heavily on the strength of the U.S. equity market. If stocks keep levitating, Bitcoin may grind higher. But if equities stumble, the fallout will spread quickly through crypto. By the close of this year, McGlone believes we'll know if the first domino has tipped. Let's get back to the interview.
I think that's a very unlikely scenario, partly because there's too many people who are long it, exposed to it.
Or just in the next 5 years?
No, ever is a long time. Next 5 years, very unlikely. I think Bitcoin is more likely to lose a zero than add a zero at this stage. Number one thing for it to continue higher is U.S. stock market has to continue at add to its 100-year premium to the to GDP and the rest of the world. It's got to add. It almost has to do that because the correlation is the highest ever. Bitcoin and cryptos are just running on top of this massive speculation. So that's the number one thing I think for it to appreciate. And I think people who are buying might get it. Bitcoin is proving this year, as I showed, its complete negative correlation to the VIX. It's leveraged beta. And sometimes it's more leveraged beta than digital gold. Right now, it's clearly leveraged beta. And the pile-on factor is when you're supposed to be selling because they're yelling. And I hear about all these flows in Ethereum. I say, well, okay, well, I'm probably not buying as much Bitcoin anymore. And they're proving that it's a commodity. And there's thousands of these, millions of these commodities that are great for speculation. Nothing wrong with that. Remember, I'm from that background, from futures. But to me, it's just reached that point of it's too expensive. And it really reminds me of internet stocks in 1999, of the Japanese stock market in 1989. I started in the business in 1988, covering Japanese customers from the trading pitch in Chicago. And what I read about in 1929 in U.S. stock market. I mentioned that because you just look at our stock market versus GDP, and the old Warren Buffett model. You do have to go back to when Herbert Hoover was elected to have similarities, and Trump might go down with just Poor timing. The systematic risk of Bitcoin is like nothing I've ever seen. I fully expect it to do what it always has in history, to have a normal 50%, maybe 60, maybe 70, higher or higher drawdown. And now you see an example of how extreme it is. But those two words, Bitcoin and Treasury, in the same sentence is a complete oxymoron. When I think of Treasuries,
so what happens to these tickers once Bitcoin loses a zero?
well, exactly. It's the thing. That's what happens. They get stopped out, and then it's time to buy Bitcoin. Maybe we'll get lucky this time, but this is all predicated. Remember, this space helped get that president elected. It was a bit of a Faustian bargain, and these things typically don't work out so well. That's why I point out is also remember who started this? Michael Saylor. At Strategy. I mean, I was very close to him. I interviewed him in 2022. It was our first time that Bloomberg had an open event, and I agreed with him. That's when he jumped on board in 2020. He jumped on board with Bitcoin. Well, the main reason MicroStrategy back then jumped on Bitcoin was his software company didn't have a lot of upside potential. So that was fine. An alternative. It worked great. He doubled down. He got a 10x, and now he's doubling down. And he actually has been taunting Warren Buffett for free and heavy in cash. David, it's the most significant example of lesson you learn in the trading pitch is never mess with the market gods. Thou shalt not tempt the market gods, and he tempted the market gods, and I wish them luck. But this, I think I'm going to look back in history and write in my book, this is an example of peak bubble. And here's a problem I also have with Bitcoin. There's 21 million other cryptocurrencies. People like Tom Lee have gone over to Ethereum. Like, okay, well, there's another million you can rotate at some point. Rotate it. There's unlimited supply of. And only in 2009, there was only one. Now there's 21 million or 20 million. So they're quantities and they're expensive and people are buying them at the highs. The lesson of commodities is they go down because they went up and they go up because it went down. So I think we're just going to head towards that going down phase, and it's going to be pretty enduring. And things like Dogecoin are going to have to drop a couple zeros, and Bitcoin might drop a zero. Now, to end all that thing, the U.S. stock market has to stay elevated. It's August. We don't have a minor correction. But for now, it's early days. That's why I think the end of this year is going to be so telling. And that's why by the end of the year, if the U.S. stock market is just up 5%, everything, the dominoes tumble. And so I think there's good indications for that.
McGlone's warning lands like a cold splash of water on a market intoxicated with dreams of endless gains. His case isn't built on hunches but on patterns that have repeated for a century. Booms swell, faith peaks, and then the unraveling cuts deeper than most imagined possible. The unsettling part is that Bitcoin has shifted from being a counterweight to the system to being chained directly to it, rising and falling with equities instead of standing apart. If that tether holds, then its next great test won't come from inside crypto, but from whatever shock hits broader markets first. A slide back to $10,000 would feel brutal, yet within the rhythm of past cycles, it would only be another reset before the long climb resumes. The hard truth is that Bitcoin's story now hinges less on ideology and more on how much strain global markets can endure before something breaks. So the real dilemma for investors is this: will Bitcoin reclaim its independence as a store of value, or remain just another speculative mirror of Wall Street's excess? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.